missiles. So probably the whole rest of the world's military industrial complexes chose to increase the number of missiles that they're going to have on hand, since they saw missiles work against a supposedly sophisticated missile defense system. And so that probably increased the demand for silver. And again, that could be part of the cause of backwardation. You've got these militaries out there who are putting in orders, leading the missile makers to not really care what they have to pay to get the orders out the door.
You're watching CapitalCosm. My name is Danny. It is October 8th, 2025, and my guest today is the publisher of Rubino.substack.com. It is John Rubino himself. John, thank you so much for coming on, my friend.
Hey, Danny. Good to talk to you again.
Likewise. Let's get right into it, John. What is your top story? I mean, the top story on everyone's mind is gold and silver, but if you've got anything different to lay on the table, feel free. But otherwise, we're going to be talking a good bit of this podcast on the precious metals.
Yeah, well, I mean, there are a lot of big stories out there, some of which are existential. We're blundering into wars again around the world, and AI is doing unique things to the jobs market and to human history. So those are very big stories. But yeah, in financial markets right now, gold and silver taking off like they have seems to be generating the most headlines. And definitely for me personally, it's the biggest story because I've basically been a gold bug for 25 years now. And it's about time that stackers and other kinds of precious metals fans get the reward for their patience that I think we deserve. So yeah, right now gold is taking off. It's outperforming basically everything else out there, with the exception of silver. Silver is outperforming gold. And on the charts that you've got there, this looks like another precious metals bull market that is similar structurally to the 1970s and to the 2000s, both of which were great times to own gold and silver. I think this time is different in one fundamental way, though, and that is that the fiat currency experiment seems like it might be coming to an end. A lot of big countries, and I include most of Europe and the US and Japan and China on that list, have basically exploited having a fiat currency, which is to say an unlimited credit card, by borrowing way too much money. And now they're kind of locked in. There's nothing they can do about it. Take France, for an example. They cut themselves very cushy retirement deals. Their versions of Social Security and Medicare are extremely generous. They get to access them at a fairly young age. And a lot of people in France now will make more money during their retirement years than they made during their working years. And that's bankrupting the French government. The French deficit is going through the roof, and every French leader knows this. So whoever becomes prime minister immediately tries for austerity. They try to cut back spending because they know they're heading for a financial cliff. And the people of France immediately hit the streets and get the prime minister kicked out of office. And so they're having a revolving door government now, where the last prime minister named his cabinet and then he resigned like 16 hours later because there was so much blowback. So they're past the point in France where they can actually stop what's coming. They're going to go bankrupt regardless. And it's very obvious there because of all the political turmoil that's following the financial crisis. But it's basically the same everywhere else. Japan has the same problem. China has that problem. Most of the rest of Europe, including Germany, are rapidly going bankrupt. And the U.S., I mean, we've borrowed insane amounts of money, and we're still running, even though it's not a crisis. We're not at war. There's no natural disaster or anything. We're still running $2 trillion a year deficits, and the cost of the interest cost on that debt is going parabolic, which adds to next year's deficit, which in turn increases next year's debt. And we have nothing we can do about that either. There's no way to stop this. Even if the US government tried, the only way they could do it mathematically would be to cut baby boomer entitlements in half. And we won't put up with that. My generation will never accept cuts in benefits, So So it's not possible to fix any of this stuff. Now, if that's true, if we're headed for, or we're at a point where governments have no choice but to inflate away their currencies, in other words, finance their ever increasing debt with newly created currency at the cost of the exchange rate of that currency, if we have no choice but to do that, then that means the precious metals story is way more interesting than it was in those previous two bull markets because, the world's currencies were basically relatively stable during those two bull markets. And so, we had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so. In other words, they were kind of a normal market, bull market followed by a bust, followed by long consolidation. It might be very different this time because if these currencies are in the process of failing, then it's hard to see what the actual upside limit is for gold and silver because taking it to its logical extreme, if the dollar goes to zero, gold goes to infinity when priced in dollars. So that makes the precious metal story much more interesting and also harder to analyze because how do you know when to take profits when the currency that you're pricing your gold and silver in is falling potentially to zero? So I don't have an answer for how to trade this whole thing, but I think there's a decent chance that precious metals are an absolutely epic holding from here on until this thing resolves itself somehow. So I think the people who've been stacking should continue to stack and hold for a long time. Don't think, okay, I doubled my money, I'm gonna cash out 2/3 of my holding. Don't do that in this market. There will be corrections, and some of them will be painful. But think of them as a buy the dip opportunity until the whole currency thing sorts itself out.
Right. And I have a chart here of gold stretching all the way back to 1996. And this is from an app that I just got acquainted with called forecaster.biz. We have a special link down below for those interested in the app. And as you can see, the gold price has gone completely parabolic. What's also cool about this app is that you can see how much each different asset you have charted has grown over various time intervals. For example, gold's up 11.6% in the last month, 31% the last 6 months, 52% this year, 55% over a year ago, 142% in the last 3 years, 109% in the last 5 years. The last 20 years, up 752%. And then right below that, we can see the annual performance of gold. And we've had about 4 consecutive green years in gold so far, this year being the highest, up 52%. Now, people will often say, gold's been lagging behind XYZ asset. But when you look at gold long term, it's had more green years than red years, at least since 2005. And much to your point here, John, there does appear to be something different about the gold price, and we'll get to silver here in a second as well. Because if you look at seasonality, another cool thing is you can look at seasonality with Forecaster, and the current gold price. So, in October, we are well above the 5-year average, denoted here in blue, as well as the 30-year average in black. So we are well above where the price ought to be, looking at history, well above, especially here in October. And finally, you look at these overbought, oversold indicators. We've been in overbought territory. The warmer it looks here on this line, the more overbought it is. And nevertheless, we've continued to move on up with gold. And what's interesting is that if you look at this chart over the last 10 years, whenever we hit an orange or a red marking here on this chart, we typically come back down and correct, right? You looked here in 2020, we were overbought, we came down and corrected and consolidated for a number of years. It happened again in 2022, we were orange and red, we came back down and consolidated. But over the last year, we've been hitting overbought territories and we've continued to move on up. with very little to stop us. And you can tell here by this other cool mechanism. They've got this market mood meter, and it tells you if we're in FOMO territory or in greedy territory, meaning are we is this thing overbought or undersold? And we are at levels that we've seen back here in 2024, April of 2024, I should say, which is around here on this chart. But nonetheless, even though we were in extreme overbought territories, we continued to move up for another year and a half up until present day. So, I mean, John, is it different this time around, given all the indications? I mean, I don't want to get too overexcited, but has gold run up too far too fast, or has the game changed? Have the rules of the game changed, so to speak?
Actually, probably yes to both of those things. Bull markets don't go in a straight line. They have spikes and then corrections and consolidations and all of that. And just the general trend is up overall when you zoom out and look at it over a long-term period. And so we could be getting close to a correction in precious metals right now, because it has been in a really exciting few months. And that might be a reason to do a few things with your mining stocks. For instance, I have a lot of gold and silver miners, and I've written some covered calls on them, and I sold 10% of a given position a few times to just kind of lighten up on things that have had really nice runs. But also, yes, it's different this time, because this looks like the end of that fiat currency experiment. And in that case, you get the potential for a much longer run. So I would say if you're loaded up on physical, then just ride it. Make that be your generational wealth. Think of your pile of silver coins or gold coins or whatever as something that will bail your grandkids out 30 or 40 years from now when they really need it. So don't think of it as the thing you're trading in and out of it all. Now, with your mining stocks, yeah, you look at a chart like you just showed, and that tells you to lighten up a little bit on some of your more successful positions, and that's reasonable. Taking a little money off the table in an equities position is frequently a really wise thing to do. So you can hold both of those ideas, that gold and silver are overbought right now, and that this time is different, and the ultimate upside is much higher than it was in past bull markets. You can hold both of those ideas in your mind and be right both ways, very possibly. So it just depends from there on what your risk tolerance is and everything, how much you want to take off the table.
Yeah, and then you also look at some of the forecasts, some of the projections that they have here as well. Their bullish forecast is up to 43.53 by the end of the year, and the bearish forecast is somewhere around 39.66. So even though gold has gone up substantially the last couple of months, the forecast based on prior history, based on all of these other times in history, you've had times in history that mimic what we're seeing today, that are highly correlated with today's price action in 2020, in October of 2022, in November of 2015, in July of 2009, and in October of 2005. And in each of those cases, gold has risen from anywhere from 7 to 22% over the next 3 months. You did have 3 bear cases here, and in which case the max drop, somewhere around 0.5% to 13%. So even despite all that, it does. It does appear to be in line to what we just talked about. The upside far outweighs the downside in a weird way.
Yeah. I think longer term, the upside vastly exceeds the downside in this market. And one of the really interesting things that complicates a portfolio of, say, precious metals miners right now, how to manage it, is that earnings season is coming up for the miners. And they have just had the best quarter, the third quarter of 2025, as far as the price of what they're selling. The price of gold and silver went up dramatically during that quarter. So they're going to report massively positive comparisons, both sequentially and year over year, over the next month and a half or so. And it's going to be this drumbeat of really good news in the mining space. So that makes it hard to take profits psychologically too, knowing that that's coming, because you're going to see, Newmont generate $1.5 billion in free cash flow. And what are they going to do with it? They'll probably buy up a bunch of the little stocks in your portfolio. Stuff like that is going to be kind of normal news, and it's going to be part of the speculative landscape in precious metals, because this kind of momentum, they've had two really good quarters already. This is going to be the third, and three dramatically upward sloping quarters in a row. Puts you on the radar screens of momentum traders. And it's been a long, long time since the precious metals miners were on screens like that, but they're going to be this time. They're going to be among the tiny handful of industries that are reporting stellar numbers right now. And so I think that's going to play a role in the near term, the trading arcs of a lot of these stocks, because you're going to see generalist money coming in, attracted by the momentum of earnings and maybe the stock prices.
Yeah, year to date, looking at this chart here, GDX, which is the gold mining stock ETF, is up 123%. I mean, they say nothing goes up in a straight line, but if you look at price action from August up until present day, it pretty much looks like a straight line with a few blips to the downside here and there.
Yeah, it has been a spectacular run. And these big ETFs have done just great. That kind of that's part of the tricky part of mining investing right now, because how much of that run is based on anticipation of the great earnings that the big miners are going to put up in the coming earnings season, and how much of that, how much of those earnings will be a surprise to non-precious metals oriented investors, a really pleasant surprise. It gets them excited and causes them to start throwing generalist money at this market. There's no way to know. But I think that the generalist money thesis is valid. A lot of people who really don't care about mining and don't know how it works and don't know the history of it are going to look at these past few quarters numbers and go, man, that is serious upward momentum. I want to ride that trend while it exists. And there's so much more generalist money out there than there is specific precious metals oriented money, that it won't take a big percentage of the generalist money to have a big impact on these stocks. So I don't know. I mean, it's a great time operationally for these companies, which means their downside risk has to be limited by that.
Yeah, I mean, there is something different going on, because if you look at seasonality on GDX, this is the red line here. This denotes the current year that we're in. And in October, we're not supposed to be anywhere near this level. You can see how it's diverged from previous averages in history. You've got the 5-year average here in blue, 15-year average here in green. And as you can tell from a seasonal standpoint, it's really not supposed to see much action up until around March or so, but we've begun running ahead of time. Is this could this also be like a sign of smart money getting in on the play before some serious price moves happens in the metals themselves?
And that's actually different, that chart, from the other seasonality charts I've seen for precious metals, because normally, and this is my sometimes painful experience talking here, normally the best stretch for precious metals, especially the gold price, but also the silver price, is fall heading into winter, because that's when the Asian jewelers are buying their raw material to be able to make jewelry for Asians to give to brides in spring weddings. So it usually they have to load up on inventory heading into winter, and so normally you see pretty good action in my experience, in precious metals in September, October, November, and then January and February are usually excellent. And then if you're me, you start thinking, okay, seasonality doesn't matter anymore. I'm just going to stay fully invested. And then you get the sell in May and go away part of seasonality, and everything goes down and it gets super boring. And, I wish I would have sold in January. And so this chart doesn't look like that. So I'm not sure why, what the
Well,
difference
it's
is
a gold mining
analytically.
because it's I believe it's because it's a mining stock chart as opposed to a physical gold price chart. Would there be? I
Hmm.
mean, there could be some
Well,
difference because of that.
yeah, I don't know, because the miners are usually the things that have me excited when the seasonality thing kicks in. So I can't explain it, um, but just generally speaking, nothing has mattered, not seasonality, not anything else, to precious metals lately. And part of that is that central banks are the new whale in this market. They're starting to buy because they need to back their currency with something that's not treasury bills, and they're not very price sensitive. So they've just been throwing, newly created yuan or rupees or whatever at gold and just buying as much as they can, and that has kind of smoothed out the trend for gold. You don't have this big seasonality kind of thing going on, because the central banks are buying at whatever price. And now you've got a new whale coming in, which is the crypto guys, because companies like Tether are setting up uh, coins. All right, what's the term for that? Oh, tokens. Sorry, tokens. Yeah, where they go out and they buy gold, put it in a vault, and then they set up tokens that trade based on that gold on a blockchain. And so you've got basically electronic gold that you can trade, and so crypto money is starting to flow into gold too. And I think they really, based on, let's say they have a lot of Bitcoin, they're not very price sensitive either, because the asset that they have been holding for most of the last 5 or 10 years has gone up by thousands of percent. And so, let that new whale decide that they want access to gold via miners, and they start buying miners. Then the old indicators of trading trading patterns in precious metals won't hold anymore, because you've got these guys who are not price sensitive and who have a lot of money and who want gold, and then presumably they want silver too. If you can set up a token with gold, you can do the same with silver. So that's another thing that makes trading based on history very hard in the precious metals market now, because there's just so many new players, and so much macro stuff going on that it's really hard to look at history and draw any useful conclusions unless you fold all this other stuff in.
Yeah, I'm looking at another thing to consider as well is that another reason why or clue that price may no longer be as much of an issue with procuring these precious metals is that if you look specifically at the price of silver, most notably the spot price of silver, currently sitting at 49.29 at the time of this recording. Futures price 48.89. Now the spot price is higher than the futures price, indicating something called backwardation. Why is that a big deal here, John? I mean, does that not indicate that buyers in the spot market are, they're foregoing the future for the present? In other words, saying, I don't care to an extent how much it costs me to get this stuff. Just go and get me this stuff.
Yeah, backwardation in a market generally means that physical supplies are really tight. In other words, there are people who are buying it right now. They want it today. They don't want to wait in the futures market, in part because there's some macro thing driving, the need for the material, in this case silver, in the short run, or there's fear that the futures exchanges are going to go bust or default or something like that. And in this case, I think you've got both of those fears out there. For instance, India radically increased its silver buying in the last couple of quarters. They bought much more than they usually buy of silver. And then you've got a lot of industrial users who require silver to make what they're making. And if it looks like silver supplies are going to be tight, while this is happening, silver's in deficit. The mines of the world aren't producing enough silver to cover demand. So we're having to eat into existing above ground stocks in order to satisfy all the demand. So, a lot of the companies that use silver in the products they make could very easily be saying, "Look, my CEO will kill me if we don't have enough silver to make next quarter's quotas, and so I'm just going to buy what I can in the open market right now." And so we stock up. Maybe we have a couple of quarters worth of metal there. So be it. And you might be seeing stuff like that out there, and that might be the reason for the backwardation. And if that's the case, that's phenomenally good for silver. If you've got some really big players out there who can't wait for 1 month in the futures market, then that's a sign that things are tighter than maybe they seem if you're just reading headlines out there. So, and that was always going to happen. Silver was always going to have a squeeze because as long as it's in shortage now, in other words, we're using above ground stocks to cover the deficit that exists in the market, there's always the danger that you just run out. Nobody knows how much extra silver is sitting around in the world that can be used to cover this deficit. And eventually, assuming there's a finite amount of silver out there, and eventually there will be a time when it starts to run out and people start panic buying. And I'm not saying this is that time, but I'm saying that when that happens, the beginning part of it will kind of look like what's happening right now, where you're in backwardation and the price is going up, and it's just a really favorable market for stackers who have a whole bunch of silver stashed away somewhere. So, whatever happens next, I can't say, obviously, but I think this is a really favorable time to own silver because of the structure of the market and because of the longer term trends and everything else you can think of about it. It's all pointing in the right direction.
Yeah. And isn't it significant that this backwardation just so happens to occur right as you can see here? We had an all-time high in silver. Is there any is there any significance to that?
Oh, I think the price contributes to it because if you see the price going up like this, and you're somebody whose job it is to make sure there's enough silver on hand so General Dynamics can make as many missiles as the government wants or whatever, and you see the price going up like this, you start suffering from FOMO, fear of missing out, right? Because you know you're going to eventually have to buy X amount of silver, and you don't want to have to pay twice today's price for it. So maybe you just bite the bullet, pay today's price,
Right.
and put security over profitability for a little while. And because the alternative, actually running out and not being able to make those missiles, that's more catastrophic than just overpaying briefly for a component that's not even that big of a deal per missile or per EV or per solar panel. So I think the price can cause backwardation, in other words, and that could be part of the story today.
It's a very interesting point. You bring up the fact that silver is also a war commodity. And right now, as you and I are speaking, there's two big theaters of war that are ready to pop off at any moment. You've got the Ukraine-Russia bit, but then you've also got this Iran-Israel war that could break out at any moment as well. And for all these THAAD missiles and rockets that they're going to need to blow each other up, they're going to need silver, monster boxes of silver that are just going to.
Oh yeah.
Yeah.
See,
So
nobody announces how much silver is in a given missile, so we don't know exactly how much. There's no way to run a spreadsheet with the information we don't have, but supposedly it's considerable. Supposedly there's a fair amount of silver in a given missile, and the first battle between Iran and Israel I think was very important because Iranian missiles evaded Israeli missile defense systems in a lot of
Mhm.
cases. And so I think the rest of the world's military procurers looked at that and said, oh, missiles work. We're going to need more missiles. So probably the whole rest of the world's military industrial complexes um, chose to increase the number of missiles that they're going to have on hand since they saw missiles work against a supposedly sophisticated missile defense system. And so that probably increased the demand for silver. And again, that could be part of the cause of backwardation. You've got these militaries out there who are putting in orders, leading the missile makers to not really care what they have to pay to get the orders out the door. And so the result is an extremely tight market. And I don't really see any end to that unless we make peace all of a sudden, and that doesn't seem to be in the cards. And
I
Trump
don't think.
Trump ran as a peacemaker, but he sure is involved in a lot of stuff in the world if that's his attitude. And it's highly unlikely that a year from now the Middle East is placid and peaceful.
Mhm.
And Europe, Europe is the worst actor in the whole geopolitical story right now because they're actively trying to start a war with Russia. It looks like, and they're probably doing that to distract their people from their domestic mismanagement. But you know. Um, there are very few things that make it worthwhile picking a fight with a nuclear power, and Europe seems to be doing that. And it's just hard to believe that there's any political reality in Germany or France or wherever that makes it worth taking that risk. But there they are doing it. So, bad for most of us, great for silver.
It's interesting again that you bring up the war aspect. I'm going to pull up a chart on silver here. We're going to look at it. And this is from over the last year. And what you'll notice is right before June 13th of this year, which is when Israel hit the first shot on Iran, you saw silver spike up, and you see how high it got into overbought territories here. Right here, you've got May 31st, and then boom, sudden price spike right before the war started. Now, you and I know insiders are able to buy up this stuff before the general public does, on the basis of because they have inside knowledge. And you're starting to see it happen again. So, very interesting points you brought up there, John. The war aspect is this a sign of countries arming up their weaponry for for more war down the line? I guess we'll have to find out. But I think that's all I have lined up for us here today. Anything else that you want to talk about that we didn't get into before we sign off?
Hey, Danny. Well, AI is such a big story right now, and that
Mhm.
ties back into the silver story at least because they apparently these data centers also use silver in the microchips that they're buying right now. And so that's yet another industrial use for silver where there isn't a lot of price sensitivity. So yeah, I think we've covered the precious metal story really well. And of course, the world is so complicated right now. There's so much going on, but AI and all its implications could be a whole show just in its own right. Maybe we do that next time, because what it's doing to employment and what that does to government spending and what that in turn does to currency valuations. There's a currency collapse scenario that starts with AI as well. So
Yeah.
let's talk about that more next time.
Yeah. All right. Well, the door is open, John. Whenever you're ready to come back on for an AI episode, definitely
Yeah.
game. So great. Where can people find you if they want to see more of your work?
I'm at rubino.substack.com, and I run a newsletter there that basically looks for actionable advice related to stuff like, war and AI and precious metals market trends and things like that. And so far, so good. It turns out there's a lot of actionable ideas around those subjects.
All right, guys. If you enjoyed this video, drop us a like and comment "Go, John, go" in the comment section. Also, let me know your thoughts down below, whether good or bad. I do, in fact, read the comments. So drop me your thoughts. and subscribe to the channel so you don't miss an episode. And by liking, subscribing, commenting, doing all the YouTube stuff I'm supposed to tell you to do, it does go a long way in helping boost this channel in the algorithm. So much appreciated for your help. And of course, a big thank you and shout out to our partners today, Forecaster.biz. We have a special link for you guys to use if you're interested in the Forecaster app and tool. Amazing host of features and tools that, quite frankly, I think are worth their price tag. So if you want to take advantage of it, the link is in the description box down below. All right, guys, I'll talk to you later. Bye.